Last week became a very volatile week for the markets. Nasdaq down more than 3%. And my advice to not sit overnight seemed to be a very good advice, as Nasdaq was up one day and then heavily down the next. And this will continue into the week for sure, maybe not as much, but we are at levels where things can happen even faster. More about that a little bit later. You are listening to the StockInvest.us podcast Trading Tips with Jim, but I will, as usual, tell you what I think will happen in the week ahead of us, give you a little insight into my thoughts, where I'm trading, and of course, at the end of the podcast, we will get to the $1,000 challenge. Remember to like the podcast and subscribe if you find it interesting. That will help it grow. Over the last few weeks, I've been warning you of increasing volatility, and that would be perfect if you're a day trader. I also said that there is a high chance that now we will get into the periods where Nasdaq may fall more than 3% in a single day. And Nasdaq done so last week and the week before. Single days Nasdaq was down more than 3%. Some of the reason why I'm able to say these things is because I look at how buy and sell signals stack up, and this give an insight into greed and fear, where we are in the market. Are we too high? Is it too positive? That means that we suddenly can get a lot of sellers, for instance. Are we at top of the trend? Several indicators to use. I also said, I believe that was maybe 4 or 5 podcasts ago, that I created new systems to detect early tops and bottoms in the market, and that it was flashing sell signals for Nasdaq. And let's start there. Going back to that same signal, you will find it at getagraph.com, and maybe later also at StockInvest. The same one. But going there, looking at the signal now, I can say that the technology and energy are flashing a buy signal. After having a sell signal, both of them currently giving a buy signal. And if we move to the commodities, we can see that oil is down at $74. At the same time, a lot of things is happening in the Middle East. Israel is waiting for an attack from Iran. US sent down several destroyers, hunger ships to the region. Everything is ready for a major bang. If that happens, and right now the chances are extremely high that something will happen, energy should push upwards. So I believe $74 to be a good entrance level for oil and oil-related companies, in general energy. That will include also gas, etc. And one of the tips which I've been saying for a few weeks is Frontline. I told you Frontline was, in my opinion, a good buy some weeks ago. Then the price was $23.54 and it went up to $25.26 for a little bit back, and even having a red week in the markets last week, Frontline hardly fell much at all, ending the week at $23.30. And this was the argument that war stocks, energy stocks could hold up in a situation like we are now, where markets are turning. And maybe you like to read a lot of news, so you scan the news and you see one article blaming Trump for the falls. Well, then you can blame Kamala as well, because after the polls increased for Kamala, well, markets went down. If you are a little bit more neutral, not so biased, you understand that the markets were heavily overbought. They were ready for a fall back. So everything happening in the market now is natural. Last week, and also this was pushed to news. It was the work numbers, etc., pushing the market into a frantic sell-off. But markets, as I said, been high long enough, just waiting for the right opportunity to have the sort of correction that we are having. Question is, how deep will it go? Before saying more about that, let's go back to the news and all the news is saying. So in general, and I said this before, scan a lot of news is the best thing you can do. Don't get caught into single articles, etc., but scan a lot of news. Even just getting the headlines will give you a certain idea. There are many reasons why things are going, and there are so-called triggers. Last week I told you that I thought work numbers will come in much higher than what the market expected, and they did. The unemployment rate went up to 4.3. And this will just continue. Heard it first here in this podcast, and I will keep repeating that the unemployment rate will just continue upwards. Government is spending, and that is not only in US, it's also in Europe, spending as much money as they can, printing as much money as they can, hiring as much governmental people as they can, but they cannot keep up with all the layoffs which is going on, because most companies are doing sorts of reconstructions, because there is not much more in the profit margins. Also spoke a lot about this, will not repeat too much in this podcast, but the inflation put a toll on everyone in the beginning, so you increase prices. When you cannot increase prices more, you do shrinkflation, you give less for the same price, so your cola goes from 2 liter to 1.75 or 1.5 for the same price. There is no more room anymore to squeeze the consumer. The consumer is changing the behavior. I told you this would happen. And last week McDonald's numbers showed just what I said. Consumers are saving despite McDonald's giving off something called a $5 offer, trying to gain the customers. They had a 1% fall overall, and the CEO just said what I've been saying, that the consumers are tightening their wallets. We see it across everything. These things comes into effect, meaning that businesses starts to shut down. A lot of businesses shut down their shops, fired people. Tech sector have been firing very hard. Intel, for instance, last week also said that now we'll stop pay dividend and we will restructure, we'll cut our stuff. All of these things has to come out at some point into the work numbers, and as I said, I think the work numbers will just go up. So far I've been correct about that, and I think they will just continue much more up. Thursday will be new job numbers, not so important, but I think we'll see somewhat the same. The current thing they are doing is that now they give somewhat okay numbers, then they revise them the week after. It's been like this for a very long time. They even rewritten recession, they have rewritten anything, trying to push the agenda that the economy is just super, tons of jobs are being added, but the only thing that matters is the unemployment rate. That is how many people actually do not have work. So yes, you can add jobs as much as you want, but if the populations grow faster, either by immigration or otherwise, the unemployment rate is increasing, well, then adding jobs is nice, but it's not making payway in the economy. So Intel, as I said, will cut a lot of jobs, restructure, and that will happen in a lot of the tech industry. And as I warned you, AI will soon also show some of these things. Some of the reason why the market is falling is because many of the bigger companies which have a huge weight in the index are falling pretty hard, and that brings the index down. But most companies fell last week. And speaking about that, I had my worst week in a very long time. Only positive thing was gold. As I said, I'm very positive to gold. I think gold will hit 2,500. That was first target was hit last week, and I believe gold, as I said, now next target will be $3,500. Currently gold sits at $2,486 after being up $100 last week. So having gold was the only positive thing last week, because both crypto, and even though, as you know, I have only a small portion in stocks, I told you I expected markets to correct, so I was not adding more to my holdings, and I would go in things which I consider to be doing somewhat okay if markets took a fall, which I expected. And even though I had, I would say, a bad week, in total, my stocks, my portfolio was down, I guess, almost as much as 6% in total, even though I think I had some good diversity. Now, gold offsets a little bit, but together with crypto, I had a red week last week, first in many weeks. And that you will also see in the $1,000 challenge, which we will get back to at the end of the podcast. By the way, currently $1,000 has grown to $3,192.12. Dow Jones had also a bad week, down 2.1% for Dow Jones. And last week I told you, there is a chance that the week may end green, because we were at some support levels. I said it will be a highly volatile week with a fair chance that it can end green, but the support was broken and the markets pushed hard down. As we speak, Nasdaq is not oversold yet, but it is very close to being oversold. Has some support where it's sitting right now, but if this is broken, 16,500 is broken, you can expect very, very heavy falls, meaning that I will not be surprised if we see 6% or even markets being closed. We are at that level where these things can happen. There's a fair chance that we will just bounce up, that we will get off the scare, that will scare, but you should be aware that we are still in a very, very highly volatile place. And personally, I believe this might be one of the last weeks where it will be this volatile. This, and maybe next week, then it should start to settle a little down. Should you bet into the markets? Well, this is the market where you can make tons of money if you're able to do the good trade, meaning that you are able to guess the direction of the market, because it will be like this. If the market goes green, everything goes green, because they were too much hammered last week, Thursday and Friday. Now, if markets decide now we are calm tomorrow, so I will not be surprised if we see 2% upturn tomorrow, meaning that several stocks will do 10% or even more. But then again, I will not be surprised if we are down to 3% on Tuesday. The triggers this week, there is a few quarter results coming. We'll mention these very soon. But let's get back to the argument about the market. So as I said, we are at a level where things can happen very fast, especially 16,500. I will be very, very worried about this being broken, because that can send market off to a real sell-off. At the same time, we have to understand that many people are sitting in positions now, buying positions, which can be triggered a little more down in the market. You can have a lot of these getting a call, causing, as I said, very rapid falls. The buy and the sell signals, I've been talking a little bit about this as well. Last week I said it's not as low where you really have a very good buying opportunity, but they're getting lower. Actually, I said, if I remember word by word, that I personally would say that China looks and the East looks to be good. And guess who managed to have a green week overall? Well, China did. Only market, I believe, that actually went in green overall, but they were very low before. Looking at the signals now, well, we can say that US or all stocks that we analyze are down at 19. This is starting to become very low, getting close to buying opportunity. Nasdaq only 9%, and this is an absolute place where things will turn to the better very soon. But also, this is where, we can really get a huge fall. But we are at that level where things will go very, very fast, and you have to just find yourself. Personally, if trying to bet on the market now, I would go for stocks with very good support below, which already taken some fall, very little resistance above that can go very, very high. And I will not use any geared money. I think it's way too tough market for this. But Nasdaq absolutely getting close to a buy signal. As I said, from my own system, which I've developed, I see buy signals in the energy sector. I see buy signals in the technology sector. Just 2 tips there. Can start off red, can start on green, hard to say. But we are absolutely, for Nasdaq, we are absolutely close to where we can have some nice rebounds. So you just have to be ready when market seems to stabilize, and then you can just add in a little, because there should be a rebounds up. And looking at the chart, well, I can say that the rebounds can easily go to 17,500, even 18,000. In the longer picture, there has been a dead cross in Nasdaq, meaning that the market, there is expected a longer term fall in the market. The very strong rising trend has also been broken, indicating just the same, at least a slower rising trend for the markets. We can get back from these things, have happened before, we get back on track, but the chances are very, very small. And I will repeat something which I have been repeating now. I personally don't think there is much upside in the big sevens. But over the last 2 years, most stocks have actually been falling. They had a natural correction. I still think much money will go into small cap, etc., and stocks that already has been pushed way too down. Their PE values are very low. You can use PE right now for some of these companies. You just have to make sure that they are in the sector where the customer still has some buying power, or as I mentioned also in last week's podcast and a podcast before, talking about consumer behavior change. Consumer doesn't stop their spending. They just go from one type of spending to another type. For instance, they will go from more expensive clothes into less expensive clothes. So if there is a clothing brand or something, you can see that the clothing brand which has less expensive clothes may actually see very nice increase in sales, because the consumer doesn't stop spending totally unless something very, very bad happens. But we are not there yet, so the behavior will just change. Same thing with dining out, and dining now, you might see, like we have seen, you see pizzas, you see McDonald's, all of these see less growth. Cost to go might just continue upwards, because the consumer will buy their pizza frozen and not at Domino's, for instance. So there'll still be sales of pizza. So, but it will go, as I said, cost to go. So you just have to figure out which one of these will take the have the customer behavior change. Now, where will they go? And there should be plenty of upside. So personally, I will go into these sorts of companies, make sure they have support below, little resistance above, have a fair chance of doing good in current market. New York Stock Exchange 24% buy signals, London 16, down from 29 before, Frankfurt from 37 to 12, Tokyo from 21 to 3, and just in China, as I said, was up. The market was up last week, went up from 11 to 23% buy signals, while India also is doing somewhat good, 43% buy signal currently. See, a little mixed across the board. We are, as I said, getting to a place where things, when they are very low, can go very, very fast, even lower. Same thing when they are high, they can go higher much, much faster. Still indicates a volatile week. 10-year Treasury yield fell by 0.4 3.74 to 3.79, down 10% last week. Everyone now expects Powell to cut the interest rates in September. I will still say don't be too sure yet. He will have to cut to signal to the market to try to calm the market, but I'm not sure that we are done with inflation. When everyone is shutting down their shops, there will be less items available. There is still a lot of customers on the items, meaning that I think there is still a price pressure upwards. And I'm not sure if it was a joke because I didn't read the article in full. But for instance, I read that US now will take coffee out of the inflation gauge. Coffee has increased very, very highly in price, coffee beans, and now they are taking it out of the inflation. That just means that coffee prices almost double if you take that out of what is in the gauge. So the overall effect should be positive, meaning that it looks like inflation is going down, while it actually is not. And I believe most of you see that when you go to your grocery shop and you buy your regular things, that there is not much change in prices yet. We are 21 minutes into the podcast. I told you I believe there will be a very volatile week. Buy signals are getting low, but not so low that there's an obvious buying opportunity, except Nasdaq is seldom I've seen it is low. Last time when I saw it at 5, I said just buy for whatever you have, but I'm not sure I will say that on 9. I say it's a fair chance that we can have a nice rebound. My own developed system says there is a buy signal in tech sector and there is a buy signal in the energy sector, and I argued why. For instance, I believe oil can pick up a little bit. You have to remember that the oil companies at $74, they are making very, very good profits. Most of them, you have some of the higher end, shallow sand, etc. They need $40-45 per barrel to make money, and then you have some of the cheaper, bigger fields in the Northern Sea, for instance, need only $20 per barrel. Getting, of course, especially for Norway, the production cost is creeping up because of all the rules and regulations, and which are put on, so prices are increasing. We are losing the competitive edge in Norway by the minute for this. While Saudi Arabia, everyone else usually have a production cost around $14. You can imagine when you produce oil at $14, currently the price is $74, you are just making money by the minute. Good dividends still expected in energy sector. I have, over the last 2 weeks, I gave a few just stock tips, stocks which I think can do somewhat good or hold somewhat good if markets are doing good. And for India, I said that Bharti Exigam could do good. When I first gave the advice, it was at 1,090 rupee currently, sitting at 1,148 rupee after a small fall. Still believe that one to be a good choice if you are trading at National Stock Exchange India. For the US market, I had take 2. I had Frontline. Last week I said no, I think Amat and Next Tracker, Applied Materials and Next Tracker could be somewhat good, but that turned out to be a absolutely bummer. Starting the week very good, everything was looking very good. I said that Amat, when Amat was $206, to probably have some upside. Started up, then came Thursday and Friday, ending $181. Absolutely bad one there, like most. And Next Tracker NXT was not any better, even worse, was $47 when I said I think it's an opportunity, currently at $41.98. If you for some reason got into these positions on the first green day, you will see a huge jump in both of these stocks. Market being as is, I don't want to give any special advices, because this can go very, very fast upwards. It can also go very, very fast, even much more than this. When you think you have seen bad days, I can promise you it can get a lot worse than this. What I am saying is that technology, energy is currently flashing a buy signal. We do know that Nasdaq only has 9% buy signals. Seems to me there is an opportunity. You just have to be very careful where you go in. A lot of these things will be decided by quarter results. Last week I told you it was extremely many companies giving quarter results, 170 plus companies. This week will be a little less, but still there will be some. Avis Budget Group will be tomorrow, Monday. Clover the same. Clover interesting. Lucid very interesting for anyone following electric cars. Palantir and Tyson will also be. On Tuesday will be Airbnb. We'll give an insight into consumer behavior. Caterpillar will do Devon Energy. Reddit for anyone who is into Reddit. Reddit was an IPO this year, I believe. And on Tuesday you will see if that was a good choice or not. Rivian, another EV company, will also come on Tuesday, while Supermicro and Uber will show their results. CVS Health will be on Wednesday together with Disney, and Disney is maybe the biggest of the week. We know that Disney went a little woke, starting to struggle on all ends, and now we'll see if, I believe it's Igor, his name is, have managed to put Disney back on track. But Disney is facing a tough consumer climate. I read a little news before the podcast, and now there was argued that now Disney and several others are trying to squeeze more out of subscription services. I will not be so sure. Maybe they will manage this quarter, but I will not. As I said, consumer behavior is changing, absolutely changing. And this is because the inflation have eaten up your profit levels. We know that credit cards are maxed out, and I saw even Norway now has never had as high credit card debt. Everyone is living on credit cards. This will come to an abrupt end, because you cannot overdraw your credit card more than a certain amount, and then you just have to shut down everything. So subscription based, I'm not sure I will bet into subscription, that meaning also Netflix and other subscription services. And I think that Disney might show some fairly decent result, but I think there is pain waiting for Disney moving further as economy are showing signs of crack. Dutch Broads, Lyft, Novo Nordic, Occidental Petroleum, interesting company there. Robinhood, Shopify or Sony will also be on Wednesday. Thursday will be Datadog, Beauty, LI, Novax, Paramount, Plug Power, for those who are into Plug Power, and SoundHound and the Trading Desk. Friday will be Canopy Growth and Nikola. These are some of the main companies. Maybe one of your companies is having quarter results this week. At stockinvest.us we have made a warning, so you can check your stocks. We will tell you when it has quarter results, and we will also show you the expected plus or minus change during the day. So we try to make it a little easier for you to estimate the risk, the possible upside or downside related to the quarter results, so you can make a better decision. That leaves only one thing left, and that is the $1,000 challenge. And I said in the very beginning of the podcast that the $1,000 challenge currently sits at $3,192.12 after being down last week. Because NEO after was up 17-18% in our portfolio, currently sits at minus 515 after falling till 405 last week. And now it seems like it will be hard to get back on the track. We will absolutely see. I thought NEO would be sold during the week by stop loss. It didn't, but it was extremely close. Should have taken the profit at 480 or whatever we were up at, but as I said, I believe strongly in EV and green technology. It will come because the future is like that. It has to go like this. Now world is just going after all this wokeness, so the world is just dealing with realities, and we get back to coal, we get back to energy, and all the things, the sanctions, the Russians. We've been speaking so much about this in the podcast that you just have to go back to podcast. I told you how things will play out, and they have played out exactly how they were supposed to play out. Even when EV was high, I told you it's stay away. But as you know, I'm getting very positive to EV and green, because no matter what, it is the future. Now, if we get into much more worse things, huge escalation in the Middle East, okay, you can forget EV for some time moving forward. But EV technology, the batteries, everything is getting better. The charging stations are getting built out, the network is getting built out, and there is no reason, absolutely no reason why fossil cars should have a bright growing future when there is a cheaper alternative. There are things like maintenance cost. Electric vehicles have much less maintenance cost than other cars, until the day you have to change the battery. Of course, that's another story, but in general they do not have an engine. They have electro motors, and you don't need a lot of general maintenance on EV cars. Hopefully things will turn, but right now it looks a little bit dark. We were very close to $4,000 in the $1,000 challenge, but currently we are back at 3,192. That is the name of the game. No meal is for free. 32 minutes. I can only wish you the best of the week. I hope that when we get to the end of the week, your portfolio will be much greener than in the beginning of the weekend. If you're lucky, markets will just pick up. I think we are heading for yet a volatile week, but that doesn't mean it cannot end green. Let's cross the fingers. Let's meet next Monday for the next podcast. Until then, bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.